Listen, right now, millions of American seniors are making an incredibly expensive mistake every single month. And you know what the absolute worst part is? They don't even know they're doing it. Welcome to this explainer, where we're going to uncover a massive, frankly shocking blind spot in mainstream retirement finance. We are talking about one specific sentence, just 7 little words, that the banking industry, your local property tax office, your Medicare prescription plan, and your utility company are all actively counting on you never, ever saying out loud. They literally rely on your silence to pad their own bottom lines. So by the end of our time together today, you're going to have a clear, step-by-step blueprint to protect your hard-earned retirement savings. We're going to make sure your money stays exactly where it belongs, with you and your family, not with institutions that have absolutely zero legal right to keep it. Now, those 7 simple words act like a master key. I'm over 65. What am I exempt from? This single, straightforward question unlocks a whole vault of exemptions that these companies secretly hope you just ignore. And I want to be perfectly clear about something right up front. These exemptions, they aren't hidden in some super obscure regulatory footnote. They're fully published. They are codified into state and federal law. These institutions have entire compliance departments tracking this stuff. Their systems are totally ready to apply the discount the very moment you ask. But you see, the system is entirely passive. They're just counting on you not asking, letting the clock run out while they quietly collect your cash.
So why does this matter so much? Well, failing to ask this question costs the average American senior between $3,400 and $9,200 a year in fees they aren't legally required to pay. Let that sink in. That's not just a rounding error, folks. That's a family vacation, that's a car payment, that's a very tangible legacy you could be leaving to your grandkids. But most importantly, that's the difference between a retirement that actually feels comfortable and a retirement where you're constantly feeling pinched, stressed out, and anxious about outliving your money. With inflation already chewing up your purchasing power, you simply can't afford to let thousands of dollars slip through the cracks.
And look, this isn't just theoretical. Let me tell you about a real-world scenario from our research that perfectly illustrates this trap. We looked at a family member who paid a property tax bill in Hamilton County, Ohio, that was $300 higher per month than necessary. Why? Well, he actually qualified for the senior homestead exemption from the very first year he was eligible, but the county, they never voluntarily informed him. They just kept sending the full assessment every single year. He only found out 2 months before he passed away, just by chatting with a neighbor over the fence. Over 8 years, that was $24,800 paid to the county that the law never required him to pay. We're here to make absolutely sure that doesn't happen to you.
So, to make sure you preserve your financial independence and stop overpaying today, we're going to walk through 4 main areas to identify exactly which fees you can eliminate. We'll cover housing and taxes, health and utilities, banking and administration, and then we'll wrap up with a rock-solid 7-step action plan. Let's dive right in.
All right, Section 1, Housing and Taxes. We're starting here because these are usually the biggest ticket items and they have the highest probability of applying to you right now.
Here's what most retirees don't realize. 49 out of 50 states offer some form of senior property tax exemption, reduction, freeze, or circuit breaker program. If you're 65 or older and own your primary residence, there is almost certainly a legal mechanism to reduce your bill. In high property tax states like Illinois, a senior assessment freeze can slash a tax bill by $3,000 to $7,000 a year. Let's talk state income tax. 41 states don't tax Social Security at all. Georgia excludes the first $65,000 of retirement income. Kentucky excludes the first $31,110. And Mississippi? They exclude all qualified retirement income. But remember, the county assessor knows your birthday, they know you qualify, but they absolutely do not send you a letter inviting you to pay them less.
And this brings up a huge issue, especially for the 9 states that actually do tax Social Security. Full taxation of Social Security is almost never the actual rule. Seriously, it's simply the worst-case interpretation that gets applied to folks who don't manually claim the exclusion on their tax return. Every single state that taxes Social Security has an exemption threshold or an age-based deduction. But if you or your tax software don't actively claim these senior-specific exclusions, you're going to overpay on money the legislature specifically voted to exempt. So your actionable takeaway for this first part is to go track down these 2-page forms today. Check your county assessor's website and your state Department of Revenue. Now, if you realize you've been overpaying, take a breath. Don't panic. Actually, most states will allow you to file an amended return to retroactively claim 2 to 3 years of overpayments. You can literally get that money back. And getting that cash flow back becomes absolutely crucial as we look at your daily living costs next.
Moving right along to Section 2, Health and Utilities. This is all about keeping inflation from draining your retirement savings through healthcare and energy costs.
Let's talk Medicare savings programs. These federal programs eliminate or dramatically reduce Medicare Part B premiums, and sometimes even your Part D copayments. For 2026, the single monthly income limits are roughly $1,555 for the qualified program and $1,478 for the specified low-income program. Now, the part that surprises most seniors is that enrollment in these incredible programs sits below 40%. Why? Because the Social Security Administration doesn't proactively share your financial data with state Medicaid agencies. They know exactly who qualifies, but they won't enroll you until you explicitly raise your hand and apply. Plus, the income counted here excludes certain things, like specific veterans benefits, so you might actually qualify even if you think you're slightly over the limit.
Pay very close attention to this number because it's vital for 2026. $2,000. That is the out-of-pocket cap from Medicare Part D prescription drugs. Once you hit that $2,000 threshold, your covered drug costs for the rest of the year drop to zero. Not a discount, zero. But here is the hidden trap. Pharmacy point-of-sale systems frequently lag behind plan data. Seniors hit this threshold all the time and are illegally charged copayments just because the computer systems haven't synced up yet. It's heartbreaking because seniors nearing the end of the year might intentionally skip necessary medications to save a few bucks, completely unaware that the next dollar they spent would be their absolute last required dollar of the year. Now, let's talk about keeping the lights and the heat on. There's the federal LIHP program, which provides $300 to $1,500 annually. But beyond the federal level, pretty much every major utility company in the U.S. operates its own internal senior discount or low-income rate program. We're talking savings of $400 to $1,800 a year. You should never have to shiver in your own home just to save a few dollars. But, surprise, surprise, these programs are almost never advertised on your monthly bill. They won't give you the discounted rate unless you call and request a specific rate review.
So your action steps here are straightforward. First, call your state SHIP counselor. That's the State Health Insurance Assistance Program for a totally free eligibility screening. Second, around September or October, call your Part D plan and explicitly ask for your year-to-date out-of-pocket total so you don't overpay at the pharmacy. And third, call your gas and electric companies and ask the magic words about senior rates. Seriously, just a few 15-minute phone calls can lock in thousands of dollars in recurring savings.
Okay, Section 3, Banking and Administration. Honestly, this next point might be the most frustrating one of all. Those constant, annoying nickel and dime fees. I want you to think about the financial institutions you've been incredibly loyal to for decades. You know, the checking account you've had for 30 years, the credit card from the 1990s. Why are they still charging you routine maintenance fees? The harsh truth is, loyalty just isn't automatically rewarded in the banking sector. The fees only disappear the moment you firmly assert your status. Standard checking maintenance fees can drain $59 to $300 a year from your accounts. Credit card annual fees, those can eat up nearly $700. And notary fees for essential things like estate planning can easily run you $75 to $200 for a single session. But here is the industry secret. Every major bank offers a fee-free senior tier account, usually kicking in at age 62 or 65. Credit card issuers have unpublished internal retention policies to waive annual fees just to keep you. And in 22 states, banks are legally required to notarize your documents completely for free if you are an account holder. Now remember, branch staff are incentivized to open new accounts, not to migrate you to free ones. They aren't going to offer this voluntarily. You have to firmly invoke your status. Call your bank, ask to migrate to the senior tier. Call the number on the back of your credit card. Tell them you're considering closing the account due to the fee, and then just stop talking. Wait for them to offer a waiver. Silence is your absolute best negotiating tool here. And please, never pay for a notary again without checking your bank, your local public library, or the county recorder's office first.
All right, Section 4, your 7-step action plan. Let's put all of this together into a highly actionable sequence, because knowledge is only power if you actually use it. I highly recommend taking a screenshot of this list right now, or grabbing a pen and writing these 7 institutions down. These are the entities currently collecting money from you that they really aren't entitled to. Pick up the phone today, call every single one of them, and ask the exact same 7 words. I am over 65. What am I exempt from? You don't need a fancy lawyer. You don't need an expensive financial advisor. You just need a phone and the willingness to ask a question that the person on the other end of the line already knows the answer to. You have to realize these institutions know the actuarial data better than anyone. They know the exact exemption utilization rates. They know with absolute mathematical certainty that for every one senior who calls and asks for their legal exemption, 9 other seniors are going to stay totally quiet. The passive revenue they generate from those 9 people who don't ask is huge. It's recurring and it's essentially permanent because those 9 seniors will just keep paying full price until the day they die, never knowing they didn't have to. So, as we wrap up this explainer, I'm leaving you with a really important question to answer before your next billing cycle hits. Will you be the one who asks, or the 9 who keep paying? Don't let the system quietly drain your hard-earned retirement savings. Make the calls, claim your legal exemptions, and take back control of your financial independence today. You worked way too hard for your money to let it just slip away now.